What's up everyone, Ross here from Warrior Trading. So in this episode, I'm gonna break down for you how to use level 2 to improve your trading. All right, so we're gonna jump in here on how to use level 2 to improve your trading. For those of you out there that are beginner traders, I'm gonna try to be concise, but comprehensive. I'm not gonna be able to hit every nuance of level 2 that I've learned over all of my years of trading in a short video. For those that wanna learn more after you've watched this video, I encourage you to go and watch my recaps, go and watch my live trading morning shows. And for those that want to take the leap and become a member over at Warrior Trading, we've got a whole archive library of live trading plus the curriculum. And that's where I go in the most depth of just trying to give you the chance to download everything that I know about trading into your brain. But right now I'm going to try to go quick, be concise, but give you enough to make you feel like you've really learned something in this video, and I hope you do. So let's go ahead. Level 2, what is it? All right, so this is the S&P 500 on the left here, top corner. When I'm trading, this is what I'm mostly looking at are level 2 windows. You don't even see charts on this window. I've got level 2 and I've got scanners. The scanners are the proprietary software over at Warrior Trading that I use to find stocks to trade every single day. And when one hits my scanner, I pull it up, AGRI, and the first thing I'm doing is I'm looking at the level 2 and I'm asking myself, can I take a trade? Can I manage risk? And how much will this stock go up? Now, I can't do all of that without looking at the charts. So I keep charts up on a monitor just above my trading screen, usually for 2 stocks, one on the left, one on the right. And so I will look at a chart because that helps me understand how much a stock is up. It helps me understand where we might see recent support, like down here at 695.7, where we might see resistance, 749. But when it comes to actually executing the trades and managing open positions, I'm using level 2. So level 2 is an island. This right here is an island. Anyone who wants to buy or sell shares of any of these stocks, they're going to do it right here. This is all of the buyers on the left, and these are all the sellers on the right. The left is the bid, the right is the ask, and this is the tape. The tape is the time and sales. So every order that goes through is going to be on the tape. Now, I want to actually open up my trading classes slide deck here. So students that are part of the Warrior Pro membership have access to this course, which is 1,400 slides long. And also to the starter course, which is about 400 slides long. So let's look here at level 2. But before we look at level 2, let's talk for a second about level 1. So let's back this out. So what I'm going to do is I'm going to look at this video. This is a cropped image. So there's the whole thing. So this is level 2, right? But we're going to crop this down and just look at the first row, which is level 1. So what does level 1 tell us? Well, this is the first depth of the market, of the island. So on the island where people come to buy and sell, on one side of the island, you have all the buyers on the bid. On the other side, you have all the sellers on the ask. Now, if you just want to buy or sell shares, you've got all those people lined up on the bid and on the ask. So there's people actively saying, I want to sell, and this is how much I'm willing to sell for. And this is 226 on the ask. So if you want to buy right now, you don't have to sit with all the other buyers at 225 and wait. You can just go ahead and buy from someone selling at 226. Remember, every transaction has a buyer and a seller. So when you buy, you're buying from someone who's selling to you. And when you sell, you're selling to someone who's buying from you. So this is our bid and this is our ask. The bid is the highest price that buyers are willing to pay. And when we look at it on the level 2, we can see the price and the number of shares that they want to buy. In this case, it's 6,700. We always add 2 zeros. And we can see the market maker that they're using to execute their order. So they don't actually go to the island, they send someone for them. And that person is, standing there, but it's all digital, of course. It's not really down on the exchange. It's the way it used to be. It's all digital. So you've got ARCA, which is your market maker, and they're wanting to buy 6,700 shares at 225. And then you have the same market maker also executing a sell order for someone at 226 for 1,100 shares. Now, market makers provide liquidity by being on both the bid and the ask at the same time. They create the spread. They get compensated for the risk of holding the stock by being able to sell shares across the spread to make money. As a retail trader, we use market makers to execute our orders. We can't ourselves do it without this intermediary. So on the level 2, we can see the market maker, the price, and the shares available. That's level 1 data. Now, level 2 data is when you can go ahead and see, let's go to crop image, not just the first depth of the market, the best buyer and the best seller, but you go one row down. Now, one row down, you see, well, hold up, there's actually 2 buyers at 225. One is for 6,700 shares, the other's for 800, and there's actually 2 sellers at 226. Well, what if we go another row down? We'll go 2 more rows down. You see there's 4 buyers at 225. So 225 now is getting some psychological support. There are 4 buyers all wanting to buy at the same price, but there's only 2 sellers at 226. So who's got the upper hand here? It seems the buyers are a little stronger. And if you notice over on the side, this is the tape. These are the actual orders that are going through. So when an order goes through, it's colored based on whether it occurs at the bid or at the ask. So let's look at this right here for the color scheme. Let's see. Orders at the ask or above are green. Orders at the bid or below are red. Orders between the spread are typically white. They're between the spread. So orders that occur between the spread, a little indifference, right? They're not strong enough to be at the ask. They kind of met at the midpoint of the spread. Then they happen. So it's not unusual, but it doesn't communicate the same sentiment as an order that's either red or that's green. All right, so let's go back up here. So back on this window here, in terms of color scheme, the first row is green and the second and third and fourth row are green. Why? Because they're all at the same price. The first tier is green. The first tier of the level 2 is green. The second tier is red, easily distinguishable. Large stack at the first tier, smaller stack at the second tier, and very small at the third and fourth tier. On the ask side, it's the same. The best tier is green, but in this case, there's only 2 sellers at the best price, so green is only 2 rows deep. And then you've got 3 rows of red, so a little bit more there. And then you've got 1 row of yellow and a row there. And then from there, at that point, as it goes down, it's just gray. And you can see over on my Lightspeed platform, it's sort of the same. So you can scroll or you can drag the window to make it larger to see more depth. And depending on the market data subscription that you have, you can maybe see more depth or less depth. But this to me is adequate. It's more than enough. You can see what you need to see. And in this case, I see bid support at 47. And right there, boom, a big green burst of orders that went through on the tape. Popped up to 53 where there was another little stack of sellers. You could probably tell fairly quickly that learning to read level 2 isn't something that's going to happen overnight. You can learn the basics of the bid and the ask, the spread, the color scheme, but then there's a degree of gaining experience. The more you read it, the more you recognize these patterns. The more familiar you get with these patterns and what type of price action they may or may not be predicting, especially when that coincides with certain chart patterns. So we're not forgetting about charts, but in this video, we're talking really specifically about how to utilize charts to reaffirm, how to utilize level 2 to reaffirm what you're already seeing on the charts. All right, so now let's back this out again. So when I first pull up a stock, one of the things that I'll be looking for are if there are really big, well, a couple things. Number one, if there's big buyers or big sellers, and if it's thinly traded or thickly traded. Thinly traded stocks have level 2 where there's often only one or two orders at each tier, and the tiers are spread out. So there's not a tier at every cent. They're spread out as you go up the level 2 in higher in price, or as you go down, you go lower in price. And there's a spread here between the bid and the ask. So let's look at an example of another one from today, a DRTS. So this right now has a 5-cent spread. And above 60 is 65, 69, 68, 1495, 1501, 1524, 1564, 1588, 1613. It doesn't take much for the stock to go from 1460 to 1613. I can assure you it's not the same with Bank of America. Bank of America is going to be much more thickly traded. Much, much more thickly traded. This is a stock that will not move quickly. The S&P 500, very similar. These are not going to be fast-moving stocks, really, under any circumstances. They are thickly traded. So what we know is that stocks that have thinner level twos typically have lower floats. The shares outstanding, the number is lower, typically less than 50 million. Whereas more thickly traded stocks, such as Bank of America, 8.1 billion, have many, many shares outstanding, large market caps. And while that creates good opportunity for lower risk investing for long-term investors, pension funds, hedge funds, things like that, for active traders, it's not what we're looking for. Because as an active trader, my job each day is to try to find the most volatile stocks. So I'm looking at stocks that have the highest relative volume, and I'm looking at the stocks that are the top gainers. LLL is our third leading gainer in the entire market today, up 31%. And note that it's the stock that I made the most money on. You're not going to make a lot of money trading Bank of America or the SPY. And I didn't really make a lot of money today, all things considered, between my two accounts, about 9,000. My results obviously are not typical, but that for me isn't really that great of a day. Well, the biggest gainer is only 33%. Well, that one's 32%. The biggest one is 63%. And if we pulled up that chart, we'd probably see that it's not really been that interesting or has given that many opportunities. It looks like, well, in this case, the bulk of the move was later in the day. So at this point, I wasn't actively trading anymore. So it actually did give some opportunities, but in any case, I missed it because it wasn't in the morning. So my focus each day is trying to find stocks that have the potential to make a huge move. And then even if I can only capture a small piece of it, a small piece of a big move is enough to survive. A small piece of 1% is not enough to survive. You can't make money trading on really tiny moves. So we're looking for bigger moves. And so when I see a stock hit my scanners, one of the first things I'll check is the level 2. So I'm going to look at the level 2 and I'm going to ask myself, is this thinly traded? Is it thickly traded? And it doesn't matter how much volume. You can have 69 million shares of volume. This is a more thinly traded level 2. This is a level 2 where if we have the right chart pattern, we could quickly see a move up to 475 or 5. That's a 10% move. DRTS, we could quickly see a move up to 15 or 16. That could be 5-10% move. So these are the type of stocks I'm going to be more interested in. So looking at the level 2 can tell me pretty quickly whether a stock is thinly traded or thickly traded. Of course, I can see the float listed right there as well, but it also communicates that. So more thickly traded there. And then what we're going to be looking at are the size of the orders. So let's see. Let's look here. Where was this? Oh, I'm going to go into, let's see, jump up here. So we've got some order routing conversation here. I'm going to leave that alone for right now. Institutional traders, transaction sizes. Okay, so here you have a 1.1 million share sell order. Now, if you're not using level 2 data, you might have bought this at 144 saying, hey, it's up 25%. Who knows? Maybe this is going to be like this SDH and rip up to $2, $2.25. I'll make a nice profit. Probably not. Not if you've got a 1.1 million seller sitting there at 144. That's a huge order. And until that gets bought up, this thing's not moving. It's not going to go that much higher. Yeah, sure. There'll be some people that buy because they don't see it, but not that many. Now, on the other hand, what if that was on the bid? Well, that's psychological support. So that means I could buy this at 144, 145, and I would know with a 1.1 million share buy order that I could probably safely hold it with only a very tight stop of 2 or 3 cents. Maybe I could even buy 100,000 shares. Now, if it comes down to 144, if that's where the bid was, or 142, and I start to see that 1.1 million share buyer get sold into, it goes from 1.1 to 1 to 900 to 800, 700, 600, 500, 400, 300. As it starts to thin out, I might decide to sell because once that support breaks, it could drop. And once this resistance breaks, we could break in a big way. So seeing the bids and the size of the sellers is helpful in interpreting where we might have psychological resistance, 600,000 shares for sale there at 10, right? Or where we might have some support. So when I trade, I am looking at the ask price. So I buy at the ask, because if I want to get in and this stock is ripping, I'm not going to get filled if I sit on the bid. I could put an order on the bid right now and I'm not going to fill. But if I press the buy button for 70, I will fill instantly. Here, I'll show you. I'll give you an example. All right, so there's 60. See, my order's just sitting there and I'm not filling. But what if I want to buy at 70? Watch this. Boom, I'm long at 70. Instantly, instant fill. So I buy at the ask. And then to get the best price on my exit, I'll try to sell on the ask as well. I'll put a 5-cent profit on that. I don't know if I'll get filled. This isn't, a good trade by any means here. But just for instance, I buy on the ask because when I want to get in, I want to get in. And I try to sell on the ask to sell into strength. As a momentum trader, we buy high, we sell higher. Now, selling on the ask, and there we go, got out 5 cents of profit. So selling on the ask works when the stock is strong, but it means you're sometimes going to be selling too soon. And so it's not a problem, in my opinion, to hold and wait for it to top out and then sell a little bit as it starts to pull back, because that way at least you held through the bulk of the move. Whereas if you sell on the ask, it might keep going, like it just went to 14.90. Well, shoot, I sold at 75. I could have waited to sell at 90 and I would have made more money. And 100 shares were bought at 90. So, son of a gun, I sold too soon. All right, so maybe I should have sold half, 50, and then held the rest to either sell more as it kept going or as it comes back down. Again, that gets more into position management, which isn't really about level 2. But I just wanted to make that note that my eye is at the ask and watching the tape. And I also, even when I'm selling, I'm still focused on the ask price. So now let's look at a couple of examples. Through the Warrior Pro curriculum, students have access to my live trading archives. So you have, for those that are interested, if you join, you would have a ton of examples to look at. But here are a select few examples of large sellers. So let's see. I've got a couple different ones here. I'm going to pull this one up. All right, so let's jump that out. All right, so let's see. All right, so this one, and this ends up being a little bit of a dip trade. So this is 9:29.56. We're right at the opening bell. The bell is going to ring. We're going to have a moment of pause right here. And then all of a sudden, I'm going to press the buy button. Why? Technical pattern here is a long for the breakthrough $10, target 1065, the pre-market high. Now I press the buy button very quickly. And then I realize, there's a 596,000 share seller right there. I try to cancel the order, but it won't let me cancel it. The order executes, and now I'm in. Okay, well, it's a small position of 3,000 shares to start. I put an order at $10, so I'm going to put it at, probably move this up to $10, so it's going to be ready to go. But now we're pulling back a little bit. So as we dip down, psychological support will be at 950. I can add off of psychological support at 950 with a stop at about 945. So watch right here. I'm going to add down there. Now I've got 6,000 shares with an average of 978. It's important to start with starter positions. That way you can afford to add if it pulls back or add if it goes higher. If you go in full size right away, you can't maneuver. So now I'm coming back up here and watch 85 and 95, 85, 95, but that seller, that 600,000 share seller, he's still there. Now it's 750,000 shares. And it's not just one, it's 1, 2, 3, 4, 5 sellers. I got to sell here because that seller's not breaking. So what am I going to do? I'll give it a second and then I sell at 98. I sold at the ask at 98. Got a good exit. Happy with that. Got green on it. So profit was probably, before I sold, like $1,100 or so. Let's see. Yeah, $1,100. So a small profit, nothing crazy. But that that seller there. If you were just using your charts, you wouldn't have seen it. And that was a problem. All right, let's look at another one. Let's see. All right, so we'll do a couple more quick examples. All right, so on this one on Mark, we had a seller here at 50, and watch it get bought up. It's NASDAQ, but it's also EdgeX and ARCA, so it's about 100,000 shares. Watch them get bought up. And I start adding right there. As they start getting bought up, I add, and watch as it breaks. This is that, boom, breaking through a level, instant to 55. That's 5 cents instantly. Now with 10,000 shares, that's $500. I could take that off the table right here and be happy. There we go. There's $500. Maybe it goes a little higher. Again, maybe I should sell half, hold more for a bigger move, but maybe I could take the $500 and pay myself. All right, here's another one. This is a powerful one. All right, so on this one, this is going to be a little bit complicated. The stock was halted. Not going to get into halts on this video, but it was halted. It resumes, it dips, and I look to buy the price there, which is 10.29. I add there for the break at 10.29, assuming an instant break, but I'm wrong. And what I notice is that there's a bit of a wall. There's buy orders going through, but it's not breaking. That's called a hidden seller. You can visualize it on the level 2 because there's a sell order, but the stock is not breaking. Now, these could be a problem because we don't know how big that sell order will be. But think of that dam. The water's being held back right now. And if it breaks this level, if it breaks 29, what's going to happen? It's going to shoot up. So if it doesn't break and that's just resistance, then I'm in a little high. So I do try to unwind half the position at 28 to reduce my risk. And then what I'm going to do is I'm going to add back on a dip. So again, this is a little aggressive of a strategy to add back on a dip. But again, this isn't really a strategy class right now. This is more of level 2. So now what we're going to look for is this to curl up through 25 and watch what happens when it breaks 25. Added there at 8, now 18 is my average. Added at 19. What we often see is tap, tap, and then break. So there's 99. I mean, this was instant. This instantly went up to 11 bucks. Let's back that up one more time. Look at that. Look at that. I mean, that's, the water broke and it snapped. And so for traders using level 2, that right there presented an opportunity, right? So I think that I hope is motivation for you to keep learning about level 2, to keep watching hopefully the morning show, the recaps, and if you decide you want to learn more and be a student over at Warrior Trading, we'd love to have you join. Warrior Pro membership gives you access to my curriculum of classes, which is essentially me putting everything I know about trading into this series of classes. It's really a robust and very comprehensive program. It's not about being concise. Some of the classes are long, they're detailed, they're nuanced, and they're for traders that are looking to learn every bit they possibly can about the market. So I hope you found this interesting. Please hit the thumbs up if you enjoyed it. And I look forward to seeing you guys for the morning show. And if you haven't already checked out the newsletter, again, you guys are welcome to check that out. Where did I put that? Right here. So members on the newsletter will get emails for recaps, watch list, morning show. You get emails of helpful videos, live trading archives, and things like that occasionally we give out just to people that are on the newsletter that don't go on YouTube. So make sure you're subscribed to the newsletter, and I hope you're also subscribed to the channel so you get the notification when I go live, which is every day for the morning show. All right, I hope this was a helpful video. I will see you for the next one. Using level 2, you can get really good at capitalizing on opportunities, but you need to build level 2 around a strategy. So I want you to check out these 2 videos. Number 1, how to buy the dip, and number 2, the simplest strategy for beginner traders. Keep studying, keep learning, have fun, and make sure you tune in every morning, Monday through Friday, for the morning show right here on YouTube.